Everybody, and welcome to this week's Markets to Watch from Smack the Markets for week commencing the 27th of April. So we start off this week with a relatively light fundamental calendar again, but we are hearing news that some European countries are looking at tentatively easing the lockdown. So any sort of positive optimism from that sort of news story as it sort of progresses may well sort of filter through into the markets and may well sort of help some of the or impact on some of those markets that we consider trading. So let's take a look at a few markets here that we're keeping an eye on at the beginning of this week and some of the opportunities that we're looking at. Now, if we come and have a look at the Dow first of all, and just remind ourselves where the market is on a macro perspective, it is up against this sort of 24,000 to 24,150 area, which the market's kind of been finding resistance at here for the past couple of weeks. It's quite a significant level. If we go back through time here, it's a level that before the coronavirus impacted on the markets, the market found support around this sort of price point. It also coincides with 50% retracement of the coronavirus crash as well. So certainly a key technical level here or technical zone, I should say, for the market to break through if it's going to continue to rise, or it could be an area where the market finds too much resistance and where we start to resume moves to the short side. Now, if we come and take a look at the market here on the 4-hour time frame, you can see for the past couple of weeks here, the market's been contained within this sort of range around sort of 24 to 24,150 down to around the sort of 23,000 to the short side. Now, there's a very precisely tested level here around 23,100 that you can see that the market sort of tested multiple times before. So we've certainly got this sort of zone here where sideways zone that the market needs to break out of before we can start to see any resumption of trend, whether it be to the long side or the short side. At the moment, we're keeping a very close eye on these two levels. If the market can get through the 24 and 24,150 area, then we could start to see 25,000 levels being tested again. If the market can't find enough momentum to get through these levels, and it does test up here, it's tested 24,000 already this morning, then again, you're going to see here we've got one top here, we're going to have another sort of failed top here. If the market fails here, that's going to look sort of particularly sort of bearish, and particularly if the market does take out these lows around the bottom end of this sort of range. If that does happen, then our sort of target areas are around the 22 and 21,000 level in the near term, although the market could run much, much further. If we come and take a look at a couple of Forex markets now, dollar yen is one that we're keeping a close eye on. The market here from a higher time frame perspective has been, well, it's been sort of fairly sideways for the past sort of week or so, and you'll see this on the lower time frame. But the market's been finding some key support around that 107 level. Now, each time the market's sort of like compressing against that 107 level, if it does take out that area, then we've got another level in here around sort of 106 sort of 70, which if I just sort of zoom out of this, you can see sort of coincides with support and resistance back here last August. But then underneath that, well, there's not an awful lot in the way for, well, potentially a move down here towards that sort of 105 area. Now, if we come and take a look at the market here on the 4-hour time frame, you can see the price action in a bit more detail. So this is the 107 area. For the past few trading sessions, the 108 area up here has been a zone that has been the market's been contained within, and we're in the context here of a short trend. So taking out this sort of lower level really does sort of open up some potential windows to the short side, and that's what we're looking for here. And because the market's bounced off this price point a few times, we'd rather see the market take the level out first, then start to look for capturing a pullback. On other markets, if we take a look at euro against the Kiwi, this market has been on our watch list for a while now, we haven't managed to sort of capture any positions on it because it's just been sort of grinding sideways here. But if we take a look at this on the weekly, you can see that the market's come all the way back into this sort of level just underneath the 108 sort of price point. So we've certainly got a key decision point here. Is the market going to find support and we're going to start to see a resumption to the long side, or is it going to break and we start to see more deeper retracement? Now, if we come down to lower time frames below the weekly, things start to look decisively more bearish for the euro against the Kiwi. If we take a look at it on the daily time frame, you can see the level here has been tested multiple times. We've got weaker momentum increasing in the market on this each time the market tests this level, and lower highs, of course, forming here too. So if we come and take a look at this on the 4-hour time frame, you can see here on the 4-hour a very, very well sort of tested level here. It's just underneath that 108 sort of price points. It's around 1.789 this sort of level through here. We've got sort of lower highs forming. Again, break underneath this level is what we're looking for, and looking at weaker prices if that trend continues. So there's a few markets there that we're keeping a close eye on in the trading room at the beginning of this week. I certainly hope it helps, and look forward to speaking to you next time. Bye for now.